Hey everyone, welcome back to the channel. I'm Alex Morgan, and if you're new here, welcome. We cover precious metals, commodities, and macroeconomic trends that matter to everyday investors. If you haven't subscribed yet, do it right now. Hit that subscribe button, ring the notification bell, and leave a comment below letting me know what metals topic you want us to cover next. This community is growing fast, and I want you to be part of it. Now, let's get right into it. Silver has done something extraordinary in 2026. As of this week, it's trading around $85 per ounce in the US market. And if you've been watching this space, you know that just a little over a year ago, silver was sitting near $28 per ounce. That is a gain of more than 200% in just over 12 months. This isn't a rumor. This isn't speculation. This is happening right now. And today I'm going to break down exactly why, with fresh, real data pulled from some of the most respected voices in the global silver market. Here's what we're going to cover. What's driving this massive rally? Who and what is consuming silver at record levels? Why supply simply cannot keep up? What the biggest banks and analysts are saying about where silver goes from here? And, most importantly, what might happen next and which direction this market is likely to move toward? So buckle up, because this one's going to be packed with data and insight from top to bottom. Let's start with the price action, because the numbers themselves tell a story that almost sounds unbelievable. At the start of 2025, silver was trading close to $28.92 per ounce. By the end of 2025, it had surged past $70, a staggering 147% increase in just one calendar year. And then in 2026, the momentum didn't stop. Silver crossed $82 per ounce in the very first week of January, then pushed even further, setting an all-time nominal high of $121.67 per ounce on January 29, 2026. Let that sink in for a second. An all-time high, breaking records that go all the way back to 1980 during the Hunt brothers era. Now, after that record high, silver pulled back sharply, dropping roughly 30% from its peak as some profit-taking set in, and U.S. Treasury Secretary Scott Bessent made headlines by attributing some of the extreme volatility to speculative Chinese traders. That pullback was healthy in many ways, but here's the key thing. Silver has since found support and is holding firm around the $80 to $85 range as of this week. As of February 9, 2026, the Silver Institute confirmed that silver prices had already risen 11% for the year. What we're seeing right now isn't just a flash in the pan. Peel Hunt, the respected brokerage firm, raised its first quarter 2026 silver price estimate by 67% to $75 per ounce. They also lifted their full year 2026 forecast by 79%. That tells you something critical. Professional analysts with skin in the game are betting that these elevated prices are not temporary. And the reasons go far deeper than any short-term speculation. The first and most powerful driver of this rally is something that doesn't make headlines, but sits like a slow-moving earthquake beneath the entire silver market. A structural supply deficit that has now persisted for 5 consecutive years. The Silver Institute, which is the most authoritative source on global silver supply and demand, has confirmed that 2026 is expected to mark the 6th consecutive year where global demand exceeds total supply. That is an extraordinary streak with no modern precedent. Here are the raw numbers. In 2025, global silver demand reached an estimated 1.24 billion ounces. Total supply, including both mine production and recycling, amounted to only about 1.01 billion ounces. That means the deficit in 2025 alone was over 230 million ounces, equivalent to the entire annual production output of Mexico, the world's largest silver-producing nation. And according to analysis from FX Street, the cumulative deficit between 2021 and 2025 now sits at approximately 820 to 900 million ounces. That is nearly a full year's worth of global mine production simply gone from above-ground stockpiles. And this year, analysts at TradingKey estimate the annual deficit could expand even further, potentially reaching 200 million ounces in 2026. Why? Because supply growth is structurally limited in ways that make it nearly impossible to close this gap quickly. Here's the core problem. Unlike gold, which is mined almost exclusively for its value as a metal, silver is predominantly a byproduct of mining for other metals like copper, zinc, and lead. That means even when silver prices double or triple, mining companies cannot simply ramp up silver production on demand, because the rate of silver output is determined by the economics of the primary metal they're actually mining. Adding to this, Developing a new mine from discovery to first production takes 8 to 12 years and hundreds of millions of dollars in capital investment. Global ore grades for silver are also declining, meaning miners are getting less silver per ton of ore processed. And while global mine production grew by about 1 to 2% in 2025 to roughly 820 to 830 million ounces, according to Peel Hunt, that modest growth is a fraction of what would be needed to close a 200 million ounce annual deficit. Then there's the inventory picture, which is alarming when you look at the data closely. COMEX registered silver inventories in the United States are down nearly 70% since 2020. London Bullion Market Association vaults have lost around 40% of their silver holdings. Shanghai inventories have fallen to their lowest level in a decade. At current consumption rates, some industrial regions reportedly have barely 30 to 45 days of accessible silver reserves. That is an extremely tight physical market, and tight physical markets, by definition, push prices higher. Now let's talk about the demand side of the equation, because this is where the story gets really interesting. And it's the reason why many analysts believe this isn't just a precious metals bull market, but a structural re-rating of silver as a critical industrial resource. Silver is the most electrically conductive metal on Earth, period. And that single fact has made it indispensable to some of the fastest-growing technology sectors in human history. Let me walk you through the major demand drivers one by one. Solar energy. Solar photovoltaic manufacturing is now the single largest industrial consumer of silver in the world. Silver paste is used in solar cells to conduct electricity, and each solar panel requires a meaningful quantity of the metal. In 2024 and 2025, solar manufacturers consumed over 25% of the entire global annual silver supply, and global solar panel installations continue to grow year over year, driven by climate commitments, energy security concerns, and falling solar costs. Now, to be fair, the Silver Institute notes that some thrifting, meaning manufacturers reducing the amount of silver per panel, is occurring, and solar-related silver demand is forecast to dip slightly in 2026. But the overall solar build-out continues to create massive baseline demand that will not disappear. Electric vehicles. Silver demand from electric vehicles jumped an estimated 20% in 2025. Each electric vehicle contains significantly more silver than a traditional internal combustion engine car. It's used in charging systems, sensors, electrical contacts, and onboard computing systems. With global EV adoption continuing to accelerate, this sector is expected to remain a powerful and growing source of silver consumption well into the next decade. Artificial intelligence and data centers. Here's a demand driver that most people simply aren't talking about yet, but it's becoming increasingly significant. AI-linked hardware. The servers, semiconductors, and high-performance computing chips that power artificial intelligence systems require silver in their manufacturing processes. Data centers globally are expanding at an unprecedented rate to support AI workloads, and that expansion translates into growing silver consumption. The Silver Institute specifically calls out the expansion of data centers and AI-related technologies as expected support for silver consumption across multiple industrial end uses in 2026. Advanced electronics and medical applications. Silver's antibacterial properties make it essential in medical device coatings, wound dressings, and water purification systems. In consumer electronics, everything from smartphones to computers to household appliances, silver contacts, switches, and conductors are everywhere. These applications aren't as headline-grabbing as solar or EVs, but they create a steady, reliable baseline of demand that doesn't go away during economic downturns the way jewelry demand might. Put all of this together, and what you have is a metal that has crossed a pivotal threshold. As Business Today reported in early January 2026, nearly half of all global silver consumption now comes from industrial applications. Silver has transitioned from being primarily a precious metal and store of value, like gold, to being what analysts are now calling a strategic industrial metal. Gold Silver's lead analyst Alan Hibbard put it bluntly. Silver's dual identity as an indispensable industrial material and a monetary safe haven makes it uniquely positioned to outperform in this environment. Beyond the physical supply and industrial demand story, there are powerful macroeconomic and geopolitical forces that are acting as accelerants for the silver rally. And as of this week in February 2026, these forces are intensifying rather than fading. Federal Reserve policy. The Federal Reserve has been navigating a delicate path, trying to control inflation while avoiding tipping the U.S. economy into recession. Market participants currently have approximately 2 Fed rate cuts priced in for 2026, with some estimates suggesting around 60 basis points of total easing by year-end. This matters enormously for silver, because silver, like gold, is a non-yielding asset. When interest rates fall, the opportunity cost of holding silver declines, making it more attractive relative to bonds and cash. Additionally, there is growing speculation that the Fed's independence may be under pressure, and any signal of more dovish monetary policy could be a powerful catalyst for further precious metals buying. Geopolitical uncertainty. The geopolitical backdrop in early 2026 remains highly turbulent. President Trump's ultimatum regarding Iran's nuclear program has renewed safe haven demand across precious metals this week. Concerns over U.S. tariff policy, trade tensions with China, and broader foreign policy uncertainty are pushing institutional and retail investors alike toward assets that have historically preserved value during periods of political instability. And within that context, silver, with its dual role as both a safe haven and a critical industrial input, offers investors two compelling reasons to hold it simultaneously. China's export controls, a game changer. Perhaps the most underappreciated geopolitical factor in the 2026 silver market is China's decision to tighten silver export licenses starting in January 2026. China is both a major producer and consumer of silver, and its decision to reclassify silver as a strategic material and restrict exports sent shockwaves through global physical supply chains. As FX Street's analysis noted, this turned what was already a long-term structural shortage into something that resembles an acute supply crisis in global markets outside China. Physical silver in Shanghai was reportedly trading above $80 per ounce at various points during the recent volatility, reflecting just how dislocated the physical and paper markets have become. Currency and de-dollarization dynamics. We're also seeing emerging market central banks beginning to accumulate silver alongside gold, a trend that would have been considered unusual just a few years ago. Some analysts see this as part of a broader de-dollarization trend, where countries seeking to reduce their exposure to U.S. dollar-denominated assets are turning to precious metals as an alternative reserve. Silver investment demand through exchange-traded funds also surged dramatically, with ETF inflows now projected at 200 million ounces for the year, up from an earlier forecast of just 70 million ounces. That is a near tripling of expected ETF demand, reflecting just how much institutional interest in the metal has grown. Now let's look at what the professional analysts and major financial institutions are saying about where silver goes from here, because the range of forecasts is as wide as anything I've seen in my years of covering commodities. And that range itself tells you something important about the level of uncertainty and opportunity in this market. Peel Hunt has raised its long-run silver estimate from $30 per ounce to $50 per ounce, a massive revision that reflects a fundamental reassessment of what silver is structurally worth. But they note that inflation-adjusted price targets, depending on methodology, remain in the $150 to $250 per ounce range. BNP Paribas has suggested silver could climb to $100 per ounce by the end of 2026, and Bank of America, in one of the more bullish institutional forecasts out there, has projected a potential range of $135 to $309 per ounce for 2026, based in part on expectations of gold-to-silver ratio compression. The gold-to-silver ratio is a closely watched metric. It tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged somewhere between 50 and 70. Today it's sitting at approximately 62 to 63, which means silver is still relatively cheap compared to gold in historical terms. Some analysts, including those at investing.com, argue this ratio could compress significantly toward levels seen in previous precious metals bull markets. And if that happens, silver's upside from current levels would be enormous. Gold Silver's Alan Hibbard is perhaps the most bullish of the prominent voices, stating he expects silver to perform better in 2026 than it did in 2025, when it gained 147%, and that he wouldn't be surprised to see prices rise by over $100 per ounce, targeting $175 or higher. That sounds extreme, but it's worth remembering that just 2 years ago, saying silver would reach $85 would have sounded equally extreme. Tata Mutual Fund, meanwhile, takes a more cautious but constructive view, acknowledging silver's strong long-term outlook, while warning that sharp corrections cannot be ruled out given how elevated prices already are and the potential for profit-taking and portfolio rebalancing. Look, I always believe in giving you the full picture, and that means we have to talk about the risks too. Because silver's rally, as compelling as the fundamentals are, is not without potential pitfalls, and understanding those risks is just as important as understanding the opportunity. The first risk is demand destruction at high prices. When silver becomes expensive enough, industrial users are incentivized to find alternatives or use less of it. Solar manufacturers are already implementing thrifting techniques to reduce silver content per panel. If prices remain above $80 or push even higher, we could see more aggressive substitution efforts, particularly from sectors that have the technical flexibility to do so. The second risk is a significant reversal in investor sentiment. Silver's recent surge has attracted a tremendous amount of speculative capital. If macroeconomic conditions shift, say if inflation comes in much lower than expected, if the Fed pivots hawkish instead of dovish, or if the US dollar strengthens sharply, investment demand could reverse quickly, and with a smaller physical market than gold, the price moves in silver can be violent in both directions. The 30% correction from the January high is a reminder that volatility cuts both ways. Third, there's geopolitical risk. While current geopolitical tensions are broadly supportive of silver, any sudden de-escalation, particularly around US-Iran tensions or US-China trade disputes, could remove a key safe haven bid from the market. And fourth, we should not ignore the possibility that Chinese silver export restrictions could be reversed or softened, which would ease the physical supply crunch that has been one of this rally's most powerful accelerants. So here's the big question, and the one I know you've been waiting for. Where does silver go from here? What direction is this market moving? Let me walk you through 3 scenarios based on the most credible data and analysis available right now. The bullish case, $100 to $175 plus dollars per ounce. In the bullish scenario, the structural deficit deepens as China's export restrictions remain in place, ETF inflows continue to accelerate, and the Fed cuts rates as markets expect. Industrial demand from solar, EVs, and AI hardware creates a baseline of consumption that doesn't go away, while investor demand adds fuel to the fire. In this scenario, silver breaks above the psychological $100 mark sometime in the second or third quarter of 2026 and potentially tests the $120 to $175 range as the gold-to-silver ratio compresses. This is the scenario that Gold-Silver's Alan Hibbard and Bank of America's more aggressive forecasters are betting on. It's the scenario where all the converging forces we've discussed today continue to push in the same direction at the same time. The base case, $70 to $90 per ounce. In the base case, silver holds most of its gains but moves in a range rather than launching another leg dramatically higher. The deficit persists, but some demand destruction at elevated prices keeps industrial consumption from surprising to the upside. The Fed cuts rates, but more slowly than markets are pricing. Geopolitical tensions simmer without major escalation. In this scenario, silver trades in the $70 to $90 range for most of 2026, with periodic volatility in both directions. This is actually a scenario that would still represent a remarkable investment return from just 18 months ago, and most mainstream institutional forecasts sit somewhere in this zone. The bearish case, $55 to $70 per ounce. In the bearish scenario, the US dollar strengthens significantly, perhaps driven by a Fed that turns more hawkish than expected, or by a global risk-off event that sends capital flowing back into dollar-denominated assets. China eases its export restrictions, partially resolving the physical supply crunch. ETF outflows accelerate as investors lock in profits. Industrial demand weakens more than expected as economic growth slows. In this scenario, silver could retest the $60 to $70 range. That would represent meaningful downside from current levels, but even here, the structural supply deficit and long-term industrial demand story would likely prevent a collapse back toward the $30 levels of late 2024. The most likely path, looking at all the data and balancing the bull and bear arguments, points to continued elevated and volatile prices with a directional bias to the upside over the medium term. The 6th consecutive annual deficit, tightening global inventories, Fed easing expectations, and the structural growth in silver's industrial end uses are all real and are all pointing in the same direction. What has changed in 2026 compared to previous years is that investors are no longer willing to ignore these fundamentals. The silver market is waking up to the reality of physical scarcity, and that awakening is unlikely to reverse quickly. All right, that brings us to the end of today's video. And honestly, this is one of the most data-rich deep dives we've done on this channel in a long time. Let me quickly recap the core takeaways. Silver is trading around $85 per ounce in the US market right now, up more than 160% from a year ago. The rally is being driven by a structural supply deficit now entering its 6th consecutive year, explosive industrial demand from solar, EVs, and AI infrastructure, macro tailwinds including Fed rate cut expectations and geopolitical tensions, and a surge in institutional and retail investment demand that has caught many by surprise. The direction of the market, based on the balance of evidence, remains biased to the upside over the medium to long term, though volatility and potential corrections along the way are real risks that every investor needs to be prepared for. Whether silver reaches $100, $150, or somewhere in between, the structural story here is one of the most compelling in any commodity market right now. If you got value out of this video, please give it a like and subscribe to the channel if you haven't already. We're posting fresh market analysis every week across precious metals, energy, and macro themes. And don't forget to leave a comment below. Let me know. Are you bullish or bearish on silver right now? And what's your personal price target? I read every single comment, and I'd love to know what you think. This is Alex Morgan. Stay sharp, stay informed, and I'll see you in the next one.